What is up, Winning Wealthers? It's your boy Jeff. I'm here with B-Rock. We are back today with another jam-packed episode full of great content, great education. Today we've actually got Jake Stenziano on, who's someone that I consider a friend, a mentor, and honestly, I don't know, where we would be at had I not had gotten hooked up with Jake and their Wheelbarrow Profits community. So today we talk about, the lessons that Jake has learned in buying over $100 million worth of real estate, primarily in that multifamily space, and what he does from a healthy habits, self-development perspective, and just how they go about scaling and growing their business. Stay tuned. It's a great episode. We'll catch you on the other side. That's me in a nutshell. Maybe we do that after. I don't think we're that close. So Jake, obviously I know you, brushed up on a lot of your stuff. I've always thought the world of you. I guess let's start off with who is Jake Stenziano at the core, and how have you sort of developed into the person, that you've become, going back all the way to the beginning, before the pharma sales gig, before multifamily real estate investing. Like, who are you? And then we'll go through sort of the progression of your career. I think the pharma sales thing transitioning into real estate is a really good story that the listeners would love to hear.
Who are you? That's a good one, Jeff. Maybe that's why I'm in Knoxville. I'm really, at my roots, I'm a country boy. I literally grew up on a dirt road in Western New York, and it was extremely rural as a kid. And the interesting thing about growing up in a small town was that the exposure to anything other than, the very basics wasn't there. And I think that was I think that's what a lot of people struggle with in terms of multifamily investing, because they look at it as this unattainable thing for trust fund babies and, just people that got lucky. So, I grew up in a family that was, very, very middle class. Like, grandparents had an uncle that were like police officers. I thought I was going to be a high school football coach and gym teacher because I played football and whatnot. And dude, it's crazy. Actually, the other day, I got these VHS sitting here from, high school quarterback, chucking touchdowns, just slinging it with the boys. And I put it in and I'm showing my kids. And they're going, the computer's glitching. Why does it look like that? Because it was literally a VHS tape that I put in. So it's like, it's crazy to think, and you go back and start looking at this stuff. It's like, they're never going to realize. But ultimately, it was a small town atmosphere, and, just didn't know what I didn't know. There's a chair factory in my town. So I go to college, basically I thought I was going to be a gym teacher, football coach. Hated it. Absolutely hated it, right? But the one thing that you learn in a small town is a work ethic, good values. And, my dad, I saw him build multiple houses. My grandfather did. And I was kind of like the grunt growing up. So I learned a very solid work ethic. And when I was going to college for that degree, I was working from 2 a.m. to 6 a.m. that summer at UPS, loading trucks, scanning crap and all that. And then I got another job. I had a moving company. I was doing a moving company after that. So you're talking humping it, right? From like 2 a.m. to 5. But then I got my break, man. This person I knew said, you can make like $15 an hour at Radio Shack if you get commissions. I'm like, bullshit, this is a scam, because, again, skeptical. Like, that was a big deal, right? So I said, I'll try it. First 2 weeks, I'm getting smoked. I'm not getting any sales there, right? I'm going from 2 a.m. to 6 a.m. At UPS, and I step into Radio Shack, and I'm just getting smoked. Like, the manager comes over, and he's like, get your hands out of your pockets, get engaged. And I don't know what happened. Like, you have these moments in life that you just remember. I'm like, I got my fucking hands out of my pocket. Let's go. And I just start attacking, right? So I'm taking every customer that comes in. Literally from a week after that, for the remainder of the year that I was there, I was the number one commission-based sales rep in the Rochester district until I left. And I kept that. So, I learned hard work and got into sales and actually saw something slightly bigger than that extremely limited small town that I was used to. And I had this epiphany. I was driving back to the college from my parents' house, and I called my dad. He was working in a dialysis unit at the time, and I'm like, I hate this crap going to these schools. These kids are like out of shape. They don't want to do anything. It's like glorified babysitting to get them off the bleachers, right? And this is like back when they probably like the Marilyn Manson kids that look like the Jinkos, right? So it's a little different than today, but the same shit, right? So he's like, well, you're excelling at this sales stuff. And he's got, drug reps coming in and calling on him and whatnot. And he's like, why don't you sit down and speak to one of these guys? So bottom line is I sat down and I said, look, I think what you're doing is very interesting because I see like you can make six figures, you get a company car. And that was rich to me. Like if I did that, I made it. I never look back. And so he said, look, you got to get a year of outside sales experience. And, basically after that, you can, go in and apply. So I said, how do I do that? He's like, create this brag book. And he's like telling me to document my sales stuff. I just did everything to the T that this guy told me to do. Went outside, got an outside sales job for a year, got into pharma. And I was like, this is the shit, man. Like I had a group of guys, we're in White Plains. It was total, almost like, it was like quasi frat, sports type mentality. This was before the sunshine effect came in, right? And so these guys are just hustling out there, making money. And, first year, win an award. We're cruising. Like life is good. Got the company car, making six figures, made it. But then, 2008, you got Obama getting elected. They start this Sunshine Act. And it starts basically, and this is the interesting point. This is like an inflection point in American history because you start to see this quasi merger between the government and corporations. And you hear people talking about this now. And I personally don't think this is a good thing, right? It's actually a very slippery slope. And to me, this was the tip of the iceberg where government and big corporations started to merge. And that was around the time of the Sunshine Act. And you see people leaving government now to go into these pharma jobs and take these high-ranking jobs where they weren't getting paid shit in the government, and they're coming over now making bank. And so there's a lot of, sketchy stuff, to say the least, in my opinion, that's going on there. So it started to, for me, it stopped from a entrepreneurial type environment to this, you're going to be a newscaster, go out there and read the script to the doctor, do it exactly like I say or you're out. So I went for like 2 or 3 years thinking every time I went to a company conference, I was going to get fired because I'd like speak my mind and I was not fitting the mold any longer. It was not a good spot for me.
I know the feeling.
You better. So I'm like, what do I do? Like I thought I hit the jackpot. Things are good. And then they totally change the culture and what they want in order to blend and become this whatever the hell they're trying to do with the federal government. Like, I don't know. They're trying to survive. But again, it was pretty gross. So I'm saying, what the hell do I do? And so the first thing that I did was like, one, I don't like this type of culture, and I don't like the culture in New York because it was in alignment with that type of thinking. So first step was I'm out of here, right? And so I took a lateral transfer with the company. I went to Knoxville, Tennessee, and the way that came about was probably similar to what a lot of people went through in COVID. This is dating back 2011 now. I was like, all right, I'm getting better weather. I'm getting no state income tax. I'm getting lower property taxes, more business friendly. Simple. Start an Excel sheet. Peace. I'm out of here. First mover, man. A lot of people were doing that back then. Okay, that was innovative.
Yeah, no kidding.
So yeah, no shit, right? But so went down to Knoxville, and I was my friend, Gino, like his brother Marco, they owned a restaurant, and before I was going there, like, hey man, we're doing this real estate thing, and I know you want to get into something for your own. You're not really sure what it is yet. Let's look at that market down there and, see what we could do for multifamily. And I had like a doctor that was like pushing me to invest too, who, was like the last guy in my territory who never joined a medical group. Everyone else was getting consolidated by these big groups. And he's like, nah, I own real estate. I don't need to do it. I'm going to be a doctor because I want to be. F you to, you and the rest of this crap. And he kept his autonomy. So I was very like impressed by that and just his general outlook on things. So he's telling me to go buy a duplex, rent the other side out, and live in half of it. And then, I got, Gino pushing me saying, hey, invest in real estate. I was looking at everything. I thought I was going to open up my own fitness center at the time. I was looking at healthy vending. It's just stuff that I had some, familiarity with, but ultimately wasn't probably the best investment, right? So we get down there and start looking at deals. Gino's like, the prices on these things look great. I'm like, whatever it takes, because I need a lifeline because I'm about to get fired at some point, right? And so look for 2 years. I was very aggressive with the brokers, probably burned a lot of bridges initially coming into the market, thinking, I know better.
Thinking they were salespeople, right? Like,
yeah, dude, it was just, I was super aggressive and, it wasn't going over really well. Like I was probably like late 20s at the time, just kicking in doors and like, who the hell is this kid, right? Get out of here. You're wasting my time. We finally got a really rundown 25 unit, and I just started self-managing out of the gates. So I'm going to figure this shit out. I don't trust anybody to do it, so I'm going to figure this out. Took a lot of lumps, but started the growth of our management company from that day. And, we're up to over 80 team members now, got, full on renovations crew. And it all started from just, taking a leap, believing in yourself and, figuring things out over time. A lot of, scaling up type coaching that we've done, for the business side of it, because I was like so rejecting everything corporate that there's good things that I actually learned in my corporate experience that I was rejecting at the time because I was so pissed at how the culture changed. So I needed to, take a few steps back to take, more steps forward at that point. So, you asked, I guess, who am I? Definitely, proud American, family guy, living for freedom and trying to create a life of abundance for myself and my family and the people that I come into contact with. So that's a little bit about me, but, gentlemen, we can like, this can go both ways. What are you doing right now? Right. I mean, I'm happy to hear from you too. I don't want to steal the show here.
No, dude, very eloquently put. And we are going to talk through a lot about what you guys are doing with Rand and the management company and the things that you're doing with EOS and scaling out the business. These are things that are genuinely interesting to us because we're trying to figure out how to scale more and more. Honestly, we do a very similar thing. We've sort of pivoted away from multifamily. You might hate to hear that, but we do a lot of Class B industrial stuff, like buying, sort of B.
Yeah, I think if you're going to be anywhere right now besides multifamily, industrial is a great place to be.
Yeah, and we started with multifamily. We bought I don't know, 150 units or so. It's good. It's really good actually. I mean, it's just I'd say the reason that we eventually sort of pivoted away and started to focus really deep into this industrial niche is just because there's a ton of manufacturing, warehousing, distribution in this southeastern Wisconsin area, right above Chicago, and I've found that it's a little bit less competitive, to be honest, and so
the competition's a real thing because I think in multifamily, and this is something that we struggle with internally. We've purchased somewhere like 2,300 units in our time doing this, right? And we sold off the syndicated deals that we have. So we're sitting, I think like 1,650 units right now, all internal ownership. We're looking at like a 3-hour radius of where we invest. But the challenge is it is extremely competitive and you want to grow. But for us specifically, we don't really want to go outside that management zone, if you will, like that 3-hour radius of where we're buying because we're really effective there. Yeah. And to scale, really aggressively, sometimes you have to go beyond that. So that is, definitely one of the challenges if you're going to manage in-house, for sure.
Yeah. And Brock,
I was going to say, I think one of my perspectives right now on multifamily is in order to hit the returns you want to hit, right, is operations, right? The name of the game in multifamily right now is just being a strong operator and having great systems. How important do you think that is? Obviously, you've built your own team and you have your own operations and systems, but how important do you think that is right now for someone that wants to get into multifamily and hit those, 10% plus returns to have that in place?
Yeah, I think it's extremely important, and we look at everything through the lens of buy right, manage right, and finance right. And so I don't necessarily weigh any one of those heavier than the other. It just depends at what part of the process you're in. Because if you miss on the buy side, you're playing catch up, and probably the only thing you can rely on is your operations. So I think it's crucial to hit that so everything else can cascade beyond that, right? And the financing right now is truly the challenge on the buy side, right? Because you just can't get the kind of debt that you want to hold long term. And our internally, the way we view it is any time that we can lock at 4.5% for 10 years non-recourse, we're taking it and we're fine, right? Because we had deals that we were locked in at 4.5 when rates were 3.5, but we know we're good. Look, so they went down, but now they're clearly way beyond that, and we're still very happy, right? We have those locked into like 2018. So, I'm not getting worried when the rates go below 4.5. It's when they go above. That's sort of our threshold that we're looking to keep everything that, long term at that point. The operations thing, though, is what we do day in and day out. So it's extremely important. And I even refresh. So we do something called an end of day report. So we have 10 districts, within our organization, and there's all these KPIs on them, but they got a little unruly over time. Like we started reporting on too much So I tightened it up in the last week, and I actually have it right here. We look at vacant unrented units. And the reason being is we get hard money day one from somebody. And so we basically have something called a sure bond. We get $500 hard up front. We don't do security deposits. So we get that $500 hard. So my opportunity is the units that are vacant, unrented. Because if they're vacant, rented, I've already got some hard money on it for that month. So that's number one. We're always looking to have basically 0 vacant, unrented, 96% plus occupancy. Okay? And another interesting thing, and I don't know necessarily what the correct number is, and I'll ask you guys this and see what your opinion is. I have to get a quant in-house. I watched Moneyball again the other night, and I got to get – we have an accounting team, but I want somebody that's like specifically just like statistics driven. Is it, do you raise rents when your occupancy – and I think 93 is a very interesting number, but I want you guys to ponder this. Do you raise rents when your occupancy is above 93% and hold when it's below, or is there another number you look at?
It's a good question, and
I don't know what I don't necessarily know what the data says. Like I need a quant to answer that question for me, and so because I think like my intuition tells me it's somewhere at like 93%. Like if you're above 93%, you're feeling pretty good. You're making money there in most cases. Do you push it up a little bit there and test it? But if you're below, like I start just intuitively get a little uncomfortable if it's below 93%. Yeah. So I got to find a way to statistically unpack this better in terms of what brings the greatest return. But that's one thing. So water bills, just absolutely love properties that have water submetered to the resident. But we look at this every week on our Pulse report. It comes out monthly, but that's one of the things that we look at. So I want for where our different utility districts, $50 or less per unit for the ones that we're billing back on. Okay, and that's just because it's just pissing water money into the dirt at that point. The percent repaired. So this is one that we just started using in the last year. So we basically take the amount of work orders we have, get a percentage based on the amount of units, and it's very similar. We want to see 96% or greater. There's a report that goes out every week with an organization. It's percent repaired. And so all the maintenance teams are competing basically on that report. That's customer service, right? You're making sure your turns are getting done, but also they're getting graded on that. So the residents are grading them on their turns, but also the percent repaired gets put out every week. So the guys are competing on that. And then profit per unit. So when we're looking at the end of every month, we're looking at what we call PPU. I know some people like, IRR, return on equity, cash on cash. We like profit per unit. And so we'll do, a draw report every month. Ultimately, that shows us what unit types are performing the best and where that spread should be. So we like looking at that very closely. And it also helps us if we see, hey, something, this property has garages, the rents are, way higher, and so we're getting a higher yield. We can then say, we see something with garages, we can go after it more aggressively on the buy side too. So they work, hand in hand there. But
And so I think, a lot of this is, the reason why I joined Wheelbarrow Profits back in the day too, and there was a number of different educational groups like this out there that were great too. But first of all, one, I think the values of you guys like really resonated with me. So just your views in general. I think upstate New York is a lot like the Midwest and Wisconsin. I actually,
dude, I think it's more conservative than Tennessee right now.
No kidding. Yeah. Well, that's because they had to deal with a lot of, Tennessee had a lot of people coming in from other places, right? That changed stuff. But so that was one thing, but also you guys are just very strategic, big thinkers. And you're talking about some things that I think a lot of people in this space don't go that level deep. A lot of people have KPIs, and even us, right? We have a lot of KPIs that we look at on a daily and weekly basis. But there's things here that you're looking at and trying to even peel the onion back further and further. And, I respect the hell out of that.
We got to go deeper. That's what I'm saying. Like, I really want to, I gotta find beyond like the folks that we have in our accounting department. I think we got to go deeper with the stats.
Find a data science guy or something.
Yeah. Data's key. Yeah. So
I need my Bill James here.
I'm going to watch that movie tonight.
Great movie.
Yeah.
Going back to, so you said the first deal was 24 units. You and Gino took that one down together. Was the next, so when did you decide to get into syndication, right? So to bring outside capital in and scale from there.
So just to be really clear, I don't think we did a syndication until we had like 1,000 units.
Oh, wow.
Or something like that.
And I think I remember that.
And then we did 3 of them, and we literally we had one, that we just sold like 2 weeks ago, and that was the last one. And ultimately, we just found that we liked owning these things and getting the larger share because, to the point we made earlier, when we get one of these deals, we like to hold it long term, and the syndication model lends itself to selling in 3 to 5 years, ultimately, when you're the sponsor. And so we really enjoyed owning and holding these deals, building up our management company and like the cash flow from it. So, we did, I think by the time we were, I don't know, maybe a year or two into that third syndication, we're saying, I don't know that we want to do any more of these. They're great. And so I want to be very clear on this. We understand it well. Most of the people in our community are syndicators. And the cool thing is, though, we're not competing with them. Mm-hmm. So, like, the people that join our community, we're not, like, competing them for capital and raising and things. We know it, and we're happy to teach the model. And who knows? Maybe someday a $100 million deal comes our way and we decide to raise money for it. But, yeah, at this point right now, we're just, we're really kind of comfortable just owning and managing these deals internally. So we did those 3. I think we averaged like a 20% IRR, never had a capital call. And so did well with them, but just loved kind of redeploying our own capital into the deals and holding it long term. So it just, I think it was that long-termism that sort of conflicts with the syndication model. And guys, I think it's a great model, and I don't think it's bad. It just wasn't for us necessarily long term.
I think, the way that I tell people about it too. So we syndicated 13 deals. We've done some joint ventures. We each own some stuff in our personal portfolio, and we're launching a fund specifically focused at Class B industrial, specific size within southeastern Wisconsin to kind of get some diversification that you don't have within industrial that you might have with multifamily or self-storage. Mm-hmm. But the way that Brock's having some.
He didn't like my answer. He's like, Dude, syndication is it, man.
I'm out. Exactly. What I was going to say is syndication or a fund in general is like a tool in the tool belt, right? Like I don't, we still see deals. There's deals that maybe don't fit our fund model that we would still go after all day, whether that's multifamily or we bought a self-storage deal too that we really like. But like, I think so we learned syndication and also we learned that buy right, manage right, finance right. I think I messed up the terms there, but or the order, but we learned that from your group, and we're trying to apply that into our business, whether it's even if it's in different asset classes.
It totally transfers industrial though too. It's same thing, right?
Yes. So
there's no reason not to just follow that framework. Yeah.
Rinse and repeat the same framework, and we're like, hey, wait a minute, we're seeing a lot more deal flow in this, and because of we like the fund model because of the diversification standpoint. But that being said, to your point, like I fully expect to continue to grow, my portfolio outside of the stuff with investor capital. We have our deals with investor capital and those deals that fit that buy box. We're going to take them down all day and provide great returns to our investors and do that. But if there's other opportunities that might, Brock's back after he got pissed off. Brock.
Yeah, I'm sorry, man.
He shit on syndication and you just hung up on him. So no, this is fun stuff. And I was saying,
no,
Brock,
but that's the thing. Like, I really do, guys. Like, I think it's an amazing tool. To your point, Jeff. I think it's a great framework, it's a great model. It just, for us, because we started a certain way and we just had a preference for that because it was more of a longer term play. It just seemed to fit our values a little bit better there. That really all it was. Yeah.
I love it, man. And I totally agree. I'd like to, kind of go into it's super admirable the way that you guys have built to 80 employees. And I think you've done it the right way, sort of brick by brick, focusing on culture. We've been to some of your events throughout the program, and they're all amazing. And we get to meet some of the employees with Rand and the staff, and I can't remember some of the names, but you can really tell that your employees and your team really embodies that culture, and they're bought in. And So there's certain things that you guys are doing really well, scaling an organization that I think also would, just like the buy right, manage right, finance right, like that framework applies to different asset classes. I think the scaling of a business that you guys are doing applies to other businesses. And so people watch this show that aren't even, in real estate in general. And so I'd love to get your perspective on just how you approach, instilling a culture and scaling an organization and focusing on the right things, I guess, is what I'm curious about.
There's so much to that. And there's been, I've probably, every year, like, you get these different inflection points and you learn stuff and you forget stuff. But, I made so many mistakes. And here's the thing, too. You got to understand, if you're growing a company and you have 1 employee, 5 employees, 10 employees, there's going to be a lot of growing pains. There's going to be customer defects. It's the whole journey is pretty wild, to say the least. And that's why you see so many people fail and they never make it past X amount of years, and you hear all these crazy stats. Probably early on, I'll just go through some of the things we really messed up on. We were extremely scared to, like, overpay for team members, right? Like, we're going to have the money, and you're starting this group, so you're like, you don't know what you can pay. It probably took us too long to get, like, a really good benefits package with healthcare and all that stuff, because it seems like this big, scary unknown, right? And it was great to get through a lot of that stuff and systematize a lot of that up. One area that we did really well in is we have something called a Golden Ticket Club. And so we actually allow our team members that have been with the organization for longer than 2 years to actually invest into the deals dollar for dollar directly when a new deal comes up. And we don't offer a 401k. And, we've had a few folks ask about it, but I know that we smoke a 401k. It's not even close.
100%.
With what we offer. And there's literally when I say there's no fees, they're making, the same exact return for the money that I put in as they would. That's what it is. It's dollar for dollar. And so that's gone really well, and we've gotten a lot of buy-in. And it's interesting to see, and I always pick on the folks on the team when we're going through, if we're looking at pricing or we're looking at this or whatever, we're on a executive team call looking at something. And then all of a sudden, the deal that they're invested in, they're chirping up a little bit more. And they're saying, well, what about this? I think we could move this here. And so it's just that ownership piece. So to let me go on autopilot a little bit more, because I know these people are also taking the accountability and care because they're invested now, and they really. So you see it, and it's so funny. Well, should we raise rates on this one right now? Well, I don't know, guy, but this one over here we definitely should, right? And it's like. So you start to see that. So that's pretty cool. So I think we've done really well on that, and it helps to just for folks, if maybe they don't have the position that they are looking to get within the organization today, they see the growth and they see that we're constantly expanding. And that's the other thing too, is when you're growing a team like a management company, if you're buying and selling deals all the time, that also makes it challenging. So the folks here are able to see constant, stable growth of the portfolio, their own investments, and then their own trajectory in their career. So that did not happen overnight, and that was challenging, but I think we've done some really good things as well. And then it's like, all the scaling up, type stuff. So we've done, multiple coaching programs just for business development for ourselves, EOS, scaling up, I think you mentioned. And I think weekly scorecards for each role for your teams. We were talking about that percent repaired. The techs need to know what good looks like and where leadership cares, and also alignment with your big, hairy, audacious goals. Right? We want to create an enduring organization with great service and quality homes. Right? And it's this Chick-fil-A type model, ultimately, because I just, when I look at business and I look at Chick-fil-A, that's where I want to be in 50 years. Line around the corner. Yes, ma'am. Yes, sir.
Yes.
Thank you. You have the right people on the team. They're polite. They're treating folks right. They're clean environments, and people want them, and they get a good price. It's like $12 for a chicken sandwich meal. That's not too shabby. Yep. I'm happy to pay it because I'm getting the value in return, right? So to me, that's like the epitome of a quality organization, And that's where we strive, and we're attempting to get to. Far from it, right? And not going to say that we're on the level of that yet, but when you look at our KPIs and the different things that we're placing importance on, hopefully those are aligning, and then you're putting the right scorecards in place for the people. Say, like, what's that important metric for me that I got to be consistently hitting? That's really going to make the difference. So
I love that. And I think like one thing, as a lot of our listeners might be at a certain scale where they own a couple properties they're trying to figure out, but I think building those sort of systems in place in the beginning just allows you to scale so much cleaner, right? And go bigger so much quicker by setting those things up on the front end, right? Not necessarily waiting until you get to a certain scale to say, okay, now I need to set up the systems and process the KPIs. I think it's something you should start with right from the beginning, right? And set these things up and know that you're going to grow into it.
It's easy. It's easier said than done. One of the things that I struggled with was belief and trust in people, because you might hire a bad team member and have a bad experience. So then it's like, if I'm not there watching this person, is the paint going to be done correctly? Is the side of the cabinet going to be caulked without the little black dot in it that looks shitty, right? Mm-hmm. So it's learning to have trust in people, and when you find those good people, bringing them up because they know what good looks like, and then it starts a ripple effect. So going back to where we struggled, I had a hard time finding that level of trust, and without like trying to be like a micromanager or just not believe that the systems could work. And that's changed over the years because I finally have seen it. But there's something that if you're going through it, if you're out there listening right now and you're like, I got team members, I just don't, I don't believe it's getting done correctly, or it's possible, but it takes time. And you have to build culture, and you have to show up, and they have to know that you're bought in too. So it's you're probably going to give a lot more in the beginning to get that return, but then they call it the flywheel or the snowball or whatever you want to say. When that thing gets moving, it gets really interesting, but it's hard to get that fucker off the ground sometimes, So yeah.
I totally hear you there. How about to dig into that's sort of on Rand and on the real estate side of things. The other thing that you've done that is really, really impressive is build out this Wheelbarrow Profits community. And like I said, I mean, I'm already props to that. We try to implement this framework into our business still, even though we're not quite doing the same asset class anymore. But it's a great community for anyone out there. I looked at a lot of them. I aligned with Jake and Gino and their values and their system. How did you go about building this community? Because that's a hard thing to do in and of itself. It's hard to build a real estate portfolio. It's hard to build a community-based business, and where do you see that going?
Yeah, I got to give huge props to my partner Gino Barbaro, obviously. So Jake and Gino, he ended up also relocating from New York. He sold his restaurant and moved down to St. Augustine. And so at the time, it was we're just doing stuff, right? It was like, hey, we got this really cool, trajectory going on the real estate side of things, and we're both huge into self-development, and so we're like, hey, let's write this book, Wheelbarrow Profits, about our framework, because at the time we were implementing buy right, manage right, and finance right. We believed sound real estate investing is based around buying right, managing right, and financing right. So we're like, hey, let's write this out in a book. We committed. This is we're so old school, dude. We were like, all right, for the next 6 months, we're going to get up an hour early each, and we're going to write and then compare notes, and then we're going to give it over to an editor. And that's what we did for that book. Literally, and both of us, we never missed. We did it, and the book came out, right? And so I don't remember dates. I think it might have been around 2015, and that's sort of when podcasts were becoming a thing. And like, hey, let's do a podcast. Gino's like, I don't know what the hell a podcast is. I'm like, I don't either, man. Let's just, and Brock, what kind of mic is that? What do you got? Is that
the Yeti?
Is it a Yeti?
Yeah, the most basic one. Yeah.
So I had that thing back in the day, and I've never had good volume on podcasts. And I've been doing it for 10 years or something, right? I had that. Our first 50 episodes, you could barely hear me because I had the Yeti and I could not get the volume right. You sound great. It wasn't working for me, though. And I was like, I remember that fucking thing. Looks like a dildo, right?
I need to upgrade that one.
Sure does.
So, it's just, I'm just messing with you, man. But so we just started recording shit, and just talking about what we're doing. And literally, hey, we're going through cost segregation right now. We're talking about it with people, we're paving a parking lot, and just literally we're just talking about the shit we were doing, and it resonated with folks. And so, kept going with that. And then, started coaching some people, directly, and then, started building that out a little bit. So it was just, none of it was fast. It just sort of scaled it like the real estate over time. And, man, I don't even I have to go to the website now, but like hundreds of millions of dollars, invested and a ton of money raised, I think there's like 115 people that we're aware of that have fully left their W-2 to go into real estate full time. So it's, for us, we like to look at those results and we consider results-based education, because that's really, that's sort of your cash on cash return, if you will, right? Like that's how you judge yourself of how successful your community is. And I think we've, the people that have been, sort of attracted to the content have been, people that are like engineers, salespeople that are, have the ability to invest or at least have the connections to raise capital to get into it. And it's not, people were running their credit card for the last $50, and it's, it's not that, right? It's folks that are like-minded that, have the ability to perform and have done a phenomenal job. So I'm just, I'm just a cog in the wheel there, and just happy to be a part of it, and that folks find value in kind of what we do, and we share it with folks. And yeah.
That's awesome. Yeah, no, I think the world of that program, and just the coaching and ongoing, and you guys it is almost like a family in a lot of ways, that I'm still friends with a lot of people, and across even people that, have went off and done their own thing. And so a lot of the same people. We had Bill Ham come speak at an event in Milwaukee last year.
Wild
right.
Bill Ham.
Yep.
Wild Bill Ham.
Bill's done we've done I don't know, like 2 or 3 books together or something like that. So Bill's crushing it.
I was going to say that too with the events. I went to one of your events. I don't know what year it'd be. It was in Orlando, and I'm sure they've become much bigger even then. But I mean, had to have been like 1,000+ people in the room. I mean, to get that many people in the room at once. I mean, we threw an event like Jeff said. We had like 150 people, and it was a grind, right? So to really have that big of a reach, to get that many like-minded people in a room is such a feat.
Yeah, we got a really good team of folks and support staff there. And look, it's far from, Gino and myself going out there and winging it, right? It takes a village, and just really, proud of the folks that we surround ourselves with, and, things we're able to do. It's pretty cool. So.
Yeah, we're at the point where it's still Brock and I just winging it. So we got to build that village.
You gotta get some help, man. Share the wealth.
We got Rock Rose here, Gabriel and Ian and Matt, and those guys are fantastic. So we are getting some help. We're building the village, but it's fun. So one of the things that we talked about, or that we like to talk about, and I'd like to get your perspectives on, because I know you're so big on self-help and and just continuous learning and education, like just habits wise. Is there any things that you do in your personal life, just the stuff that you're trying to read, or how often you read, or just healthy habits in general that you try to be able? I always tell people, like, if I eat right and get a good workout in and get good sleep, and I focus on, continuous learning and self-development, like a lot of the other things are going to take care of themselves.
How many times a week are you working out?
I mean, I probably about 5 times a week. Yeah. I get in there.
Like, so
I don't have any kids though.
No, it's not the time. Like, so I got a gym like right underneath me, right? So, dumbbells, cardio, like all that shit. It's like full decked out. So it's that, but I actually like to go. We have a YMCA up the road. I like going just because it gets me out of the house sometimes, right? So it's not the time thing; it's the recovery. Like I find that I can lift 3 days a week. Yeah, and if I go, I need that like couple days in between to recover, and then I'll do like 2 days of HIIT training. Yeah. So I got 200 steps down to my dock here, right? Yeah. And so I'll sprint those. Or I'm in a pretty hilly neighborhood, or I'll like ride my bike, and I'll do that for about a half an hour. Yeah. Anything more than that, the recovery becomes like there's like diminishing returns, dude. So it's like that's the balance now of like I'd like to lift 5 days a week, but I don't think I'm actually getting the benefit from it. It's interesting. I don't know.
What's funny is I literally I've started to put a lot more focus on lifting a little bit less, cutting that down, and doing more like. Really, because I used to not even like really stretch or warm ups and stretch. I now I'm like I'm in there just trying to I'm like grunting like I would be lifting, but I'm stretching because I'm trying to just get more and more mobile. And I do the same thing. I look for there's some this long line of stairs in downtown Milwaukee over by the lake that I sprint up it, and then I like the hit stuff too. I love that, but you're not wrong.
I don't want to be on like a fucking treadmill for a couple hours. So I'm out there sweating, doing stuff where I'm sprinting. And dude, I think that the most valuable thing that we've said on this podcast is the stretching. So I went through, and I played football in college a little bit. Like I used to squat like 5 plates on each side, right? It might have maybe 6. Like I had really strong, like fuck my back up bad.
Yeah.
Oh, I know.
So I can only squat like 50-pound dumbbells now. And for the last 2 or 3 years, I've been going to this chiropractor, and I've finally gotten out of the hole. And so I stretch first thing in the morning for about 10 minutes and right before bed. He's like, you have to do this. And now I actually only see him once a month, and it's like a tweak tune-up.
Yeah.
But dude, you gotta as you get older, like the stretching and the, I'm 42 now. Yeah. The stretching and the pacing of this stuff, you know, you can actually go into a hole in a deficit if you think you're going to do the same shit you did when you're like 18.
Yeah,
so, I'm 34, and I still feel like a lot of times I feel like I'm 22, but then it's funny that you're bringing this up, because this is a point where it's finally hitting me, and I'm like, damn, my knees hurt, my back hurts, everything hurts, and I still feel strong. I still feel like I can keep up with it, but it's the recovery part.
Yeah. Yoga has been big for me.
So that's
I've been starting to do yoga once a week, and I always used to think it was just for girls, and I started doing it, and it's been great. I mean, you just feel so much more loose, and it feels great.
Miami yoga, I see where you're
it's nice.
You're killing it. You're killing it, Brock.
He's pretty smart. Yeah.
But no, like the habits thing is interesting. So, you know, we're trying to, like my wife and I trying to travel more. I feel like we end up doing like, we're pretty close to hitting like 1 or 2 vacations a month now. And it might be like a 3 or 4 day or whatever. So I think that helps, because I'm such a robot when it comes to like discipline and organization. I've been time blocking since like 2005 or something. And it's probably been like the thing that contributed to more of my success than anything else. Is just, I just follow the yellow brick road. I got this list every day, and it really hasn't changed. The actions have changed. But I think I've done pretty good at delegating out a lot of things. I've gotten better over the years, because there's also like a point of diminishing returns where you can bring like the stuff into your life. And if you don't scale out other people to help you manage that stuff, it gets sort of not fun too, right?
Yeah.
Like you start to, I want a third car, a fourth car. And then it's like, well, okay, there's registrations and shit that have to be done with that. So you have to like almost find help there scaling that stuff out as well. And even locally here, I have 3 properties. So I have my house here. I have like 17 acres right around the corner where I have like 4-wheeler trails and like a shooting range and shit. So it's like all this stuff, and then they got like a condo downtown. So it's like you bring all this shit into your life, but then it also creates chaos, and it takes away from the simplicity and enjoyment. So you also have to find ways to scale things internally at home and bring folks in to help there. So, we've done a good job of, we have 2 people that come in during the day, and we actually homeschool, but, one is a homeschool teacher and one helps, like with nannying things. And then, so it frees some things up, but also, I'm looking at myself saying, do we need a house manager potentially, right? To take on a lot of this other stuff as well, because it's like, it becomes less enjoyable. And it's like, do I want more shit in my life if I can't, truly enjoy it? So when you look at your life as you look at your business, that scale and that, the way you break that stuff out is very important. Otherwise, it's like diminishing returns, like we're talking about, right? It's like this stuff just becomes a problem, because I have a standard. Like, I get a little crazy with shit, but like, look, I want my basement clean. I want, my house to be, I don't want caulk spots. I want the paint to be tight. Like, so you want to live at a certain standard. Otherwise it actually makes me angry, and I don't want to be a part of it. So it's like this weird sort of dynamic, and that may just be me, but I'm sure a lot of people feel that. So if you can't find ways to incorporate and bring folks into your life that can help with that, you probably shouldn't be doing it, if that makes any sense.
I agree.
Man,
with
that resonates. Yeah. A ton,
lifestyle design, right? I think for me, it's like building a business for me is like, I want to do it to create a certain lifestyle, right? At the end of the day, and you want to make sure that lifestyle you want to build, right, ultimately is designed the right way, right? And you actually are going to enjoy it once you get there.
Yeah, even for this, right? So I enjoy, like, I'll go out and literally clear trails at my land just because I get out in the woods, and it's like peace, and that's like spirituality for me. Like I get away from, like, I love you guys, but I get away from this kind of shit, right?
Yeah.
And so I'm in my basement the other day, and I got 2 fucking chainsaws that are leaking oil. So it's like that kind of thing, like probably having somebody that could help out with that, to take them in, to get them serviced. And, it's like little shit like that where you may not think of it, but dude, I'm going to waste a fucking hour or two of my time. Like, and here's the arrogant thing that you don't really want to say out loud, but it's like, what I make per hour to do that is fucking idiotic for me to do that. Right. So
you're not wrong,
but.
Yeah, Naval Ravikant, the Almanac of Naval. It's a great book, and he talks a lot about that. He basically valued his time at, I think it was $2,000 an hour, even way before it was anywhere near that. And he said he just made a definitive decision that he was going to outsource anything that didn't that wasn't going to be over $2,000 an hour or something like that, right? So if the chainsaw thing, he would, and he was in San Francisco, he would just have someone on TaskRabbit come over and deal with it, and he would, and then eventually hired an assistant to help with it, just all of his.
That's where, I think that's where ultimately you got to get to, and it's like it starts to feel a little weird at some point, but it also makes sense. So you can't argue, right? So
I completely agree, man, and I think this has been super fun. I want to be mindful of your time. I think. Again, like I said, everything that you say, like, we're friends on Instagram. We like the same stuff a lot of times. A lot of the same political stuff and same views. Same memes and shit we're like. And so I see.
You see me popping up on there.
I see you popping on there. I'm giving it a heart too. Don't worry. So, man, we got a similar background in W-2 corporate sales and football and all that stuff and discipline. So I love having you on, man. I really, really appreciate it. What events do you guys have coming up? What's either?
Yeah, so we got like to Brock's point, we got an event coming up this October. It's going to be in Orlando, but really most of our stuff it's internal, for the team only. Like, this is not when I said it's like results based education. Our events are not sales events, right? We host multiple events throughout the year, but it's only for community members. We have Manage Right coming up, for example, in Knoxville in a couple months, and then we have these money mixers, and we do have we have a closers club coming up, I think later this month actually, where different folks from the community come on and just showcase what they're doing. There's really cool deals that they're closing, and they come on and they're able to showcase their talents, and it's cool because a lot of the folks are syndicating, so they're able to work on their pre-zo skills, and they get some influence and traction out in the marketplace. So yeah, JakeandGino.com, baby, hit us up.
Yes,
but only if you're fit. All right,
that's right. That's that's right. Hey, what do you real quick? I wanted to get on this too. I mean, we got an election year. Not to get too far into that, but what are your thoughts on just the economy, multifamily, the election? How do you think things are going to play out?
It's a very interesting question because I saw a stat the other day that basically said, no Democrat in X amount of, I don't know if it's 20, 30 years has won when there hasn't been an interest rate cut in the election year. And so the Fed is in a really tough spot right now because they're saying we want to cut when CPI is at 2%, right? Dude, inflation just keeps going. It got worse today, literally.
Yeah.
And so for them to be able to cut and basically hold their integrity, that ain't happening this year. Like I don't see that, coming into play here. So are they going to cut for cut's sake, right? Meaning are they going to cut the rates? So so I think that piece of it is the thing that I'm keeping my eye on. If the rates continue to go up, food is getting more unaffordable. I think folks are really frustrated with it, and a lot of this legal stuff, I think that you're seeing going on with Trump, I think people are getting frustrated with as well. So it's people want a fair sort of competition, if you will, and it'll be interesting to see how it shakes out, man. I mean, that is my frothy top of the coffee, statement right there. We can go deeper if you want to start waving the MAGA flag here or what. It's up to you, whatever you want to do, man.
Hey, I love it. You got friends and friends with Brock and I on that. So totally agree. I know,
but I do think the 10-year and the rates are going to be an interesting determining factor. I hope, right? You hope that it's authentic and real. I guess at the end of the day, right?
Completely agree. Brock, you got any? Oh man, we lost him again.
Maybe it's the syndication, the political shit. We lost him and half your audience too with that statement, right?
Exactly. We're okay with it. We're just trying to have fun, man. That's with any of the meetups or any of the stuff that we do this podcast, I genuinely just want to have fun and talk to people that I'm interested in learning more about, things that I'm curious about. So I don't give a shit if we lose any followers.
No doubt, dude.
Yeah. But anyways, dude, I know you got to roll. I think you're talking to Gino after this. You were saying, tell him I say hi. I'd love to come down to an event, man, and hang out with you guys again and just catch up.
Sounds good.
All right, brother. Good to see you, man. Yep. See you, Jake.
Take care.
All right. That's a wrap. We just finished up with Jake Stenziano. What a awesome episode. He's a lot of fun to talk through. He's someone that, I think everyone will get a kick out of, right? He's not just robotic business person. He really delivers a lot of fun along with some serious next level business acumen and real estate acumen. Goes into how he goes about building a business, scaling his company, building the right culture, different KPIs that they look at, that they're tweaking, that they're always evolving. And like I said in the episode, he's always looking to peel back the onion, get deeper, and try to find. We talked about him wanting to hire a quant or a data science person to get even further into the data. And I think that's the next level thing that is going to become more and more prevalent within all businesses as data and artificial intelligence and data science becomes more and more mainstream. So there's a lot of great things here. If you found value out of it, please like, subscribe, smash the subscribe button. I say it every time. Please do it. I just have fun saying it, but share it with your friends and family. We appreciate this and you guys listening greatly. We'll see you next time. Thank you.